Question 12 is a tax-based question, but requires us to have some tax rules to actually apply. In the exam, you're not expected to remember any specific tax rules. These will be available to you as a separate tab that you can click on. In this case, we're looking at the tax rules for country Z, and the kind of information that you would be given is, as we can see here, details of expenses which are not allowed as deductions for tax purposes. These three examples are fairly typical of what would appear in the real exam in terms of things like entertaining, taxes paid to other public bodies, and accounting depreciation, which are generally non-allowable. The actual question then gives us a statement of profit or loss for the year to December 2006, tells us about the tax depreciation, and asks us to go and calculate the taxable profit for the year. Our starting point then is that we will take this accounting profit of 103,940. What we then want to do is adjust that profit to add back any disallowed expenses. Those disallowed expenses are exactly the items we just saw in our tax rules slide, giving detail of which particular expenses the government does not allow a deduction for. So in this case, we would need to add back the entertaining, the tax paid to local government, and the depreciation charges on both the buildings and the plant and equipment. Once we've added all of those items back to our profit of 103,940, we would then need to go and replace the accounting depreciation with tax depreciation instead. So this 35,000 would appear as a deduction from taxable profits. In this case, once we've taken the 103,940, added back all the disallowed expenses, deducted 35,000 tax depreciation, it should leave us with a taxable profit of $133,210.